March 14th, 2025. I'm going to make a video on today first, and then I'll make a video, highlighting some stuff from yesterday. Simply because, to be completely honest, I lost yesterday and I did not make a video because I had other things to do. But I don't like just making videos on the days where I win because that's just not a productive thing to do. So I will go over mostly just my trades from yesterday at the end of this video. So the day started off with a gap up. We were a little bit oversold on the daily chart, and I thought on the Globex daily chart anyways that we had a magnet above at the high of this bar, 56.75. We didn't end up getting there. I thought we might try to get somewhere up into this area, but I thought, oops, that's not the high I was looking for. What was it? It was whatever Wednesday's high was. I thought Wednesday's high was going to be a magnet. We got to it at the end of the day. For some reason, I was thinking that was the wrong day. But anyways, I was not expecting us to get there today out in the open because it was relatively far away. But obviously, when the day started the trend, it was possible. 1, 2, 3, strong enough for a second leg, 3-bar micro channel. I don't personally trade the first 7 bars of the day simply because this kind of stuff can happen. Like 7's a news bar. And we had obviously a large move down to the bar 1 low. But the thing is, the reason why I mentioned using a stop at 150% is because a lot of the times, you're going to find buyers below this low. You have 5 straight bull bars on the open, and there should be buyers below the low of 5 straight bull bars. So if you're exiting down here, it's really not all that great. You know that 1 through 5 is going to get a second leg up. We're not going to not test 1 through 5. Think about how many times, scroll back however many times you have to find 5 consecutive bull bars on the open, and find how many times that turns into a bear trend and this never gets tested. It'd be very, very few times that happens. So whenever you get this strong of a move on the open, you should expect it to control the day for the most part, at least. 6 and 7 should get a second leg down. Since 7 was so large at first, it obviously got bought back up, but it was extremely large at one point. Sellers above 7 during 8, and then a bear bar closing near its low 8. Do you sell below 8? I would not. It might be, you maybe could have sold above 7, but I would personally just wait and be more focused on catching the second leg up for the bulls. 8 and 9, consecutive bear bars, good for the bears. We're probably going at least a little bit lower. We might have to get a third leg down. 1, pull back, 1, pull back, 2, pull back, 3. So 3 would be on 11. And 11, a bull bar closing near its high. Double bottom, yeah, I think that 1 through 5 needs a second leg, so I think it's logical to buy above 11 or buy the close of 12. You know that bar 11 is leg 1, right? The bears have 3 legs down, and now the bulls have their first leg up. And regardless if it's a trading range or a bull trend, the bulls should get 2 to 3 legs up if it's a trading range, and they should get more than that if it's a bull trend. So it's logical to buy the close of 11 or to buy the close of 12, expecting that we should get back up to this high. There's a decently good chance of that. 13, a good bull bar. You could buy the high 1 above 13. You could buy the close of 14. We're going higher. Good looking bull bars and 5 straight bull bars. I bought the close of 15. I pressed the trade. I'm working on a lot. When I mentioned the other trades I took today, you'll see it a little bit, but I'm working on a lot. Pressing trade when they immediately go my way and getting out quickly of the piece that I'm pressing on when it doesn't go my way. So what I mean by that is I bought the close of 15 today. I bought more on the close of 16, and then I exited on the close of 19. I bought more on the close of 16. It's not the best follow through bar in the world, but it's still follow through. So I bought more expecting that we would get another leg up. Had we gotten a disappointing bar on 16, like a bear bar, I would have exited this piece that I added on, and instead bought it back somewhere down here on a scale in. I did the same thing over here. I bought the close of 62. And I bought more on the close of 63. I thought 64 was disappointing. And so I exited my piece that I bought on the close of 63 at the close of 64 for about break even. And then I bought it back below 62 during 66. I exited most of the trade on the close of 69. And then I exited the rest somewhere in here. I held like 30% of the trade in case we rallied straight up, but we did not. So I exited most of that in here. And then my other trade on the day was I bought the close of 39. I bought more on the close of 40. And then I was looking to get out. I think my target was right here. And then once 43, if you were watching at the time, 43 was a really big bull bar. And then in like 3 seconds collapsed and became basically a doji bar. So I just got out. assuming that, the trader who bought the high tick did a logical thing, right? Because it was a breakout. So I know that we're probably going to test back up into this area, because even though it wasn't a big bull bar closing near its high, it was at one point, which means on some time frame, there's a bull bar closing somewhere up here. So I thought we would test back up to this high at some point, since that's what trading ranges do. So I bought the close, and I exited here for basically break even, very small profit. And then I bought the close of 23. I tried to buy more around the 21 high, but it missed my fill by like a couple ticks or something, maybe a tick. And then I exited that on the close of 27. So I was 4 trades today, but I did pretty good today. But obviously, as I mentioned, I lost yesterday. And I lost more yesterday than I made today. Not by a lot, but I did lose more yesterday than I made today. So I bought the close of 15. Like I said, I expect this to go higher. 16, 17, 5 straight bull bars were going higher. A big outside up bar creating a gap with the bar 5 high. Whenever you create a gap like this, like we did, you have to expect higher prices, especially when the retest attempt of the gap 20, bar 20 fails on 21 and then 22, a new high. So odds are we're going to go higher. We have 20 consecutive closes above the moving average. Whenever you start the day off with 20 bars above the moving average and open gaps, like we have with the 13 high and the 15 low, and this gap I'm highlighting right here, you should expect that we're going to get higher prices. So we end up getting, obviously, a fresh breakout, 18. I think it's a new breakout. And then 1, pullback 2, so 2 legs up. You could argue 30 is a third leg up. The bulls who bought the close of 27 scaled in, should be able to make money. 31, 32, consecutive bear bars. It looks good, right? It should get a second leg, 31 and 32. But I don't want to sell against the bull trend. So for me personally, I would just rather wait. 33, a 3-bar micro channel. I was not going to sell the close of 33 after how much of a rally we got. I was considering selling a pullback. I had a sell limit order 1 tick above the 33 high after the close of 34. So we got 4 bear bars. I put a sell limit order 1 tick above 33, and it did not get filled. So it did not get filled on 35, and then we got a second leg down 36. I was trying to capture the second leg down, but it just obviously didn't happen. But I think 36 is the second leg down from the sell-off down to 34. Again, it's a really strong rally. It's going to get more up. So selling, you can do it if you're quick and you know how to do it, but it's, probably better off just looking to buy the close of every single bull bar. I would challenge you, just once you start to get a pullback, just start buying the close of every bull bar in the, maybe in the bottom half of the range, right? You know that this is the new breakout. And so what does Al say about channels, right? The market tests the bottoms of channels and becomes trading ranges. So when we get the spike, pullback, and then we get the 3 legs up, the lower part of 21 is a channel. So you can just buy the closes of all the bull bars in the lower half of the range for the rest of the day, and you would have made some money. The rally to 39 is going to get a second leg. We might race straight up. So I added, obviously, as I mentioned, and then disappointment on 43. 44 is allowing a lot of the traders who bought somewhere up here out, but it didn't get above the high. So I still think we have to go above this high. 47 probably should get, maybe I gave it like a 50-50 chance of getting a second leg. 1 second. I didn't really think 47 was all that excellent. I thought that, we might have to go a little lower, but I just decided to wait. We get 3 legs down, 1 pullback, 2 pullback, 3 legs down. And I don't really want to run a short anymore because we have 3 legs down, a big bull bar 55. Nothing wrong with buying 55 if you'll scale in. Since it's 3 legs down, but you probably have to have a wider stop because the bottom can be somewhere down here. It doesn't have to be below 52 or 55 or 54. This is a skunk stop. So you probably want to have a wider stop, maybe a couple ticks below the 21 low, somewhere like here, and be buying more in this area, betting that whatever leg you're getting is a 4th leg down. So you have 3 legs down, and you'd be betting that this is any leg down here is a 4th leg. So you're betting 50 against 57, and you can buy more down here. And then obviously you could use the rally to exit. I thought this was a very high probability micro channel, so I expected a second leg, which is why I ended up buying more. And we got another leg up. Still a good micro channel, still should get another leg up. But it's a leg 2, so you're betting on leg 3, which is slightly less reliable, but still fine to do. We get 2 more legs down for the bears, and then we get leg 3 up for the bulls. As far as, theoretical entries on the day, these are all by the close bars, but you have to be cautious because it's before bar 7. You can buy above 11 or buy the close. You can buy the close 12. You can buy any of these closes if you're willing to scale in. We can buy any of these closes, and then you're buying up here, particularly because fresh breakout, leg 2, leg 3. So particularly 26, 27, if you're buying the close, you should be willing to scale in. 31, 32, 33 is not as scary as it looks. Might get a second leg down, but I think the downside is probably limited. Buy above 37. It is a tight channel down, so you have to be a little careful. But you can buy above 37 with a semi-wide stop, I would personally use. You can buy more on the close of 38, 39, expecting it to leg up. I would exit on the close of 43, as I mentioned, as that's what I did. And I think that, maybe 47 needs a second leg, but the more important thing to learn from this area, I think, is that it's 3 legs down. This probably needs a second leg, and 55 definitely needs a second leg. So odds are, even if we fall below it, we're not going that far below it. So more about making sure you know that these are bad sells and that you can scale into the buy and probably make money. And as far as the daily chart, I'm just going to go over the daily and weekly, and then I'll just quickly go over my trades from yesterday and what I thought. Big bull bar, right? So probably the end of the immediate bear trend, but this is likely just a pullback. So we might be getting a 2-legged pullback, and then we might have to go back to a new low and test 5,500. We got within 10 points of 5,500, which is not close enough for me to consider it tested, but we were close enough that I think we have to test it. So I think odds are we test it maybe next week. It just kind of depends, to be honest. If Monday's a big follow-through bar, then we might have to get a couple legs up before we go back and test 5,500. But I think we're definitely going to test 5,500. The weekly chart. Oops, that's the daily. 4 straight bear bars. Good for the bears. We're probably going at least a little bit lower. Large tails on the bottoms. So losing momentum. I still think we're going here. This is a big bear bar, closing near its low. Probably going to get a second leg. The monthly chart, again, as I've said, you guys know my thoughts on that. So I'm going to go over yesterday as well. Okay. So one of the strength factors that I'm putting in my study that I'm running is it's going to take a long time to complete, but I think it's important to look at how many bars of the past 10 to 15 bars we're breaking out above, and that kind of came into play today with one of the trades that I took. So obviously a big channel down, right? The sell-off down to 5 is probably going to need a second leg, this whole move down. However, you have to keep in mind that it's the open, so it can be a little more volatile. I bought the close of 9. I added on the close of 10. I thought it was low probability that this was only the second leg. And I think I bought a little more down here, and my stop got run. So I've taken, these, you guys know the way I trade. I mention it all the time. I've taken like 40 something trades, 30, 40 trades with this sort of strategy. And this is the first time I've taken a full loss. So it's on par though to expect myself to take a full loss every 30 to 40 trades. It's just how that works. And so I took a full loss on that trade. And one of my issues with the trade that I had going into it was the 15-minute chart. I'm just going to highlight this area so I know. Yes. So the 15-minute chart, the first 2 bars of the day were large bear bars on the 15-minute chart. And there's a very high probability, whatever, 80, 90% chance that these are going to get some sort of second leg. The thing is, you have to keep in mind, you can go above the high before you get the second leg. But I thought there was a very good chance that this would get a second leg. So that was my only hesitation in buying, but I took the trade anyways. It's not as good as it could be, and I need to look at it's not as good as it could have been. And I need to spend time looking at what happens when you get a test and then a big bar closing in the other direction. Take this, you get a test and then a bar closing in the other direction. So I have to study that and figure out, exactly how often how that works, and exactly, how often that ends up turning into a failure and a losing trade, etc. And I need to spend time, like I said, looking into, when these trades when I'm pressing a trade and it doesn't go the way that I want, to scale in and all of that stuff. There's just so many things I have to do. But anyways, for the trades that I took, it was that. And then I sold the close of 46, very small. I sold more at the 45 low, and I sold more on the close of 48. I considered getting out down here, but I thought we might test 5,500. So I exited above 55 for a small loss. And then I bought the close of 57. I believe I bought a little more on the close of 58. And then I exited on the close of 64. So like I said, I had a losing day. I thought that, it was a little bit tough. I thought we might test above the 38 high. That was my premise for buying here, was that I thought we might have to test back up to this area since this is a really strong pair of bull bars. And I thought the bulls who bought up here should be able to get out. So I assumed we would get back up into this area. This is a leg 3, right? So if you're going to be taking these kinds of trades, you have to be willing to press them in leg 1, pull back, leg 2, pull back, leg 3, and be willing to exit on leg 3. So that's the, your end goal, your main goal really is to identify the best leg 1 trades. I have all these fancy colors on the chart. All it does is just identify when there's three bull or 3 bear bars in a row. But you really should be able to try and identify what's a good looking leg 1. When you can identify what a good looking leg 1 is, regardless if it's 1 bar, 3 bars, whatever, you're going to have a really good chance of making money trading. Because if it's leg 1 and you can buy closes in leg 1, you can buy bear closes, bull closes, whatever, you can expect to make money. So buy the close, get leg 2, get leg 3, get out. And obviously, it's much easier said than done. And there's a lot more to this whole thing than that. But the whole premise of making sure you're buying leg 1 is really important. The issue with that comes in on small pullback trend days like this, where you buy the bull closes. Some traders will buy the bull closes thinking they're in leg 1, and then they keep getting stopped out. So in trading ranges, buying leg 1, looking for leg 2 is like the best trade that there is. In trends, your leg count's going to be like 17, and you're going to be really confused. But if the leg count starts becoming too much, you have to start to realize that you might be in an opposite trend. Okay, I believe that is going to be it for this video.